Hello, folks. Welcome back. All right, so we're going to be looking at the Tuesday's price action for NASDAQ for April 1st, 2025. All right, so here's the daily chart, and I'll put the lipstick on that was pertinent to the recent downslide in price action. That's called encroachment of the premium wick, making the high. The draw was the volume imbalance on the daily chart. Market breaks down, attack the relative equal lows there and the relative equal lows there. And then, true to form, as I was expecting Friday, the limit order was not able to be triggered on my short position to close it. That buy limit order was tripped at Sunday's opening, and we were trading down below the projection I gave on the summary for stuck on Saturday. Here's a 15-minute time frame. Now, if you study my core content, the lessons on day trading and scalping, I walk through a lot of the preliminary things, the things that I look for, the things I have to reference. And a lot of folks say they study the core content, but I think they binge watch it like Netflix and they don't take any notes. But what I'm using and what I've used today was right out of the core content of my mentorship lessons that I used to charge money for. They're right on my YouTube channel. Just do a YouTube search on my Inner Circle Trader YouTube channel and look for the day trading modules. And it's 8 videos, and it helps you break down what it is that I'm teaching predominantly here, but just using the first presented fair value gap as the PD array. All right, so you can take a look at the low here. This was 9 o'clock's low during Asia last night. So it's my local Monday evening time, but it's all part of Tuesday's trading. And I apologize, you're going to hear my puppies trip trapping, but I don't have the patience to edit and redo it also. This was yesterday's high inside of regular trading hours. So regular trading hours high, that was where I got the 19,049.75 level, and Asia's low at 9 o'clock or thereabouts, and that's where I got the 19,283.25 level. That's the levels I gave you in the Telegram channel before this morning's regular trading hours began at 9:30 Eastern time. Okay, so I told you that those are the levels to be watching. Those are the things that the algorithm is going to be referring to, and the market did in fact drop down into it and then sent it higher later on to tag it. Now notice inside this shaded area here. Now TradingViews recently added this. Admittedly, I'm not a fan of it, but here it accomplishes the method. So what it is it's showing the shaded area of electronic trading hours and then the resuming of regular trading hours. So regular trading hours is always 9:30 to 4:14, right before 4:15. So 4:15 p.m. Eastern time, regular trading hours close. But electronic trading hours pick up and continue on into the 5 p.m. close Eastern time. And then you had that 1 hour break and we start trading again at 6 p.m. Eastern time. So this high here, notice during the electronic trading hours ahead of 6 a.m. or so, it did in fact take that high out. Whenever that happens, and then we trade back down lower, the opening bell at 9:30 regular trading hours, this is always going to be a high probability candidate to be revisited. Okay, so think about what I put in the Telegram channel this morning. Then look at what we're showing here. Anything that happens in electronic trading hours should be confirmed in regular trading hours. There's a whole lot of significance placed on what happens after the opening bell at 9:30 Eastern time. So if a gap fills that was accomplished inside electronic trading hours but not in regular trading hours, I'm going to be looking for that gap to be revisited. So even though it may happen in this portion of time, it doesn't matter as much as it does in regular trading hours. Okay, so if you study your old data and look at your old price moves that you should be journaling, you'll see that this is a truism. It's not something that's contrived just because I had it used today and it was working. So sell side we had defined and buy side we had defined. Okay. So let's go into the 1 minute chart. You can see here at 9:30, electronic trading hours shifts to regular trading hours. And then we had the opening price there. So that is the opening range gap low. And the opening range gap high is the previous settlement price at 4:14 p.m. Eastern Standard Time on a 1 minute chart. And then that's your opening range gap. Half of that is this red line here. That is the consequent encroachment level. And we didn't get a fair value gap formed all the way until this candlestick right there. Okay, so that's the very first presented fair value gap. Notice it's on top of the opening range gap high. That's that level here, 19,423.5. Now, I gave guidance this morning in the Telegram channel that as long as we are looking for price below the opening range gap high at 10 a.m. Eastern Time. Why 10 a.m. Eastern Time? 10 a.m. Eastern Time is where we had all of those reports that were due out to release data for PMI and whatever. I can't remember off the top of my head was. But there were several reports that were coming out at the 10 o'clock hour Eastern Time on Tuesday, April 1st, 2025. So I mentioned that would be the real move that would start the opening range and utilize the first presented fair value gap. So as you can see at 10 o'clock here, we were below the opening range gap high. Okay, so that means while we can spike up into the first presented fair value gap in blue, as price went up there and jumped in, I tried to time out a market order and I got filled just below, but you can see when it was executed. I'll have the recording here in a second, show it to you. But I was trying to time it as it punched up into that. And several of you have already sent me comments in YouTube on another video and or you're commenting on X to me. Why was I so confident to enter ahead of 10 o'clock news? Because all of the things that have been shown here, we had a short-term high taken out. We rallied above. In other words, we sat above price action being about this high and above the opening range gap high, which was yesterday, Monday's 4:14 p.m. Eastern Time closing price. So it just felt like they were keeping it up there and knocked out anyone that was short that would have made money going down into Asia's low. So the market trades up. Look at the bodies telling the narrative there. You see that? I teach that the wicks are allowed to do the damage. They can color outside the lines, but the bodies were telling me, okay, yeah, I'm on side, I'm right. So I'm going to look for price to start gravitating lower. Now, if I would have been stopped out here, I would have used the consequent encroachment of the opening range gap, which is this level here, and I would have went short on a retest of that. So in other words, we see it leave the opening range gap. This is the low of it, that black line. It leaves it after 10 o'clock news hits, comes back up, hits the consequent encroachment level, which is classic. It's being treated the same way I teach with an inversion fair value gap. When we have a narrative, when we're expecting price to deliver a certain way and start spooling, the PD arrays will be respected just like this. That's the signature that you're looking for. Smart money follows that. Okay, that type of thing. Okay, just understand that that's the closest thing I can say to it than what I can't show outside of the charts because it's really not in the charts that's causing, like, these things aren't making price do it, but it's the language I created to facilitate an understanding of when price will start moving algorithmically by time first, then by price running to a draw in liquidity or inefficiency. And that's primarily all you're going to see in price action, unless it's manipulation. So the market breaks down lower. We get a fair value gap here. Why is that important? Because it's the first one after moving away from the consequent encroachment level. So we want to see this act as, in some ways, a measuring gap. And if you look at essentially the high down to that low, take that range and duplicate it from here down to the low, and you'll get the same range. Okay, so it's like a measured move idea. But this is the gap I said that price should keep NQ lower than this fair value gap. So this very fair value gap, excuse me, was the one I initially talked about, and the only one I mentioned outside of the first one, that's fair value gap. That price should stay lower than that, and it should keep price lower. So it offered a premium characteristic, allowing price to touch it and trade lower. And this line right here, the 19,345.2, excuse me, 19,345.75 level is the old daily low. Okay, the very one I was aiming for after we traded higher into that volume of bounce. I told you it would run to. I have it here just for like a higher time frame reference point because it respected it here. But I mentioned that we would go down here, which is Asia's low. And the market did in fact trade down in there. Got a little busy in here and it finally came down and gave me my target and went a little bit lower. And then the sharp reaction off of that is this one of those beautiful things where we get to see the market draw right back up into the counter key level, which was Monday's high, being delivered during regular trading hours, not during the electronic trading hours over here, but regular trading hours. And you can see that actually happened as well there. And both trades that I used, both the sell side draw and the buy side draw, I keyed off of the first percentile fair value gap. First one going down and then going higher. Now, these are intraday scalps. If I were to use a day trading model, I could have done the very same thing by shorting it here and then went long on a reversal below that 19,283 and a quarter, or used this buy side imbalance, sell side efficiency with a breaker. So we have low, high, lower low, fair value gap, buy side imbalance, sell side inefficiency. Couple that together, institutional order flow entry drill, you can get long there. Now, I understand if you're new to me or you haven't really watched my work, haven't spent time with me, especially in the Telegram channel where I'm calling all this stuff live before it happens. When I talk about things like this over a static chart, it sounds like, well, obviously hindsight makes it easy. Anybody can do what you're doing. But I think I earned the right to do this now. And anyone that says otherwise is just not, they're just not worth my time spending and replying to. But a rally from here and back up above that 19,345.75 level, that's the old daily low. That rally from here sends us up into the opening range gap again. Here's the low. This is the consequent encroachment level, and then the high of it. It trades to it and through it and comes right back down, touches what? The midpoint or consequent encroachment of the opening range gap. It is now favorable to go long there. I was watching live streamers, and I was not interested in taking another trade, but when it got up into here, I was like, well, I'm gonna take it. And I'm gonna try to get in there during the first business fair value gap. And the market trades outside of it, comes back down in again here. I wanted to add, but I said this is enough, and then targeted that Monday's high and trades right up into it beautifully. It actually trades higher, and while I wasn't all that interested in following through with it, I was just giving what I've been promising I would do this year, would be simply going in, finding surgical strikes and price action based on the things I've already taught. I'm not reteaching anything. I'm not adding new lessons. I'm simply just using the material and the motives behind what to use and what to reach for. I'm just doing, okay? And a lot of you asked for this for many years, for me to just simply get on here and just do it, call it out live and then trade it. And that's what I'm doing. So for the folks that don't feel like I'm teaching, it's because I already taught it. It's all on my YouTube channel. 2024 mentorship, 2022 mentorship, the core content lessons from my paid mentorship, which I gave and gifted to the community for free. That's a lot of information in there. And you can see clearly that it still works. But a day trader's model where you're trading daily range would be going long down here after taking Asia's low. And you will learn that if you go through the core content. It's exactly what I'm teaching in that paid mentorship material. And here's the examples of my entry showing the executions. There you go there. taking partial, taking another partial, taking another partial, and then finally limiting out, and then buying here on the run higher. Let me switch that over there. So there's my entry at 19,430 inside of the first resistance area gap, and then it drops back down in. That could have been a entry there for your silver bullet during the 10 o'clock hour. There's always one every single day, every single 10 o'clock to 11 o'clock hour. There's always, every single day, without fail, it will always be there. But you have to have key reference levels to know where it's likely to draw to and where it's likely to draw from. And that's all painting a narrative and building not just simply a bias, but understanding how it's going to fulfill that idea. And then it trades up into the 19,490.25 level, which is just above the price that Monday's high was. So let me show you the video where I actually executed it. I ask you in advance just to forgive me for not updating the location of the 15-second chart on the right-hand side. So you'll see it pan out when the chart's moving. At the time, I'm capturing certain things on my phone because I only want to put my images from my phone on Telegram. So I'm not hooking my laptop up to Telegram. I don't let anything sync to my ISP. I have a separate ISP that I don't use for YouTube. I don't use for anything. I don't ever email from it, and it's just a way for me to keep things secure. So my phone will have images from TradingView captured from a phone perspective only. But you can see all these things match and everything's called out beforehand. But let's take a look at the recording of the execution. All right, so we're trading just below the opening range and inside that first presented fair value gap. I went short there. My stop loss is based on this high right here. I don't believe it's going to go up there. And if it were, I would use this level, as I mentioned earlier, to get short once it trades below it and outside of the opening range gap low. So I know I'm pretty solid now because we had one little bump above this candlestick's high. Didn't touch this one. So that's another example of random stop placement. So we're going to look for a close outside of the opening range gap low. There we got it. Now, I gave a level at 19,314.25. Where that level came from, it's basically my event horizon concept applied to Asian range low at 9 o'clock, and then the old daily lows on the daily chart we aimed for from the volume imbalance, and half of that is this level here. So we trade right back up into consequent encroachment. Again, I wanted to add here, but I was like, no, this is enough. And I want to see it get heavy in here. We left the sell side below here. So we have minor 19,340 sell side, draw to 19,314.25. Now that's your last chance right there. If you weren't short, that this is where you think you're short. Now because it's doing that last chance to get in there, that's when I move my stop to cover cost. Because if it does rally from here, I'm absolutely going to be wrong. And I probably would have taken out the high of Monday and then traded down to here. So either one of those levels, it would have been first, and then the second would be the other level. So we break lower again, took out the old daily low at 19,345.75. And he held price in here a lot. And then we have a fair value gap here. I mentioned that. We want to see that price right there. Hold price down. In other words, we don't want to see it trade back up in the opening range gap low. So I took a partial there because it's below that block of candlesticks and below the 345.75 level by one tick, but still enough. And it's testing that old daily low. And watch that fair value gap right in here. I don't have it shaded because I'm doing too many things at one time, but I called that out in the Telegram channel. So we tagged it one more time in here. So now we really want to see it become real heavy here. Heavy means we want to see price show a reluctance to want to go higher, but make it real easy for it to go lower. And that's what you're seeing here. And I'll be interested to take a partial off again as price is breaking below the lows here. So there's me taking another partial. So I have 2 contracts left. The stop's been lowered below the consequent encroachment. And as we get lower, if we take out this low in here, I'll take another partial. So that's where I was talking about. I wasn't paying any attention to this chart over here. I wanted you to be able to see everything via a 15-second chart. So you can see the order flow, everything there too. But doing too many things, that's what happens. And there's a partial again. And I lowered the stop right above the high of that fair value gap, because if it's now going to trade back to it, it's going to go higher. So I would want to be out of that. I'm just submitting to time and letting price do what it needs to do. I stated I'm allowing it to be a little dirty in here, which is what it's doing here. And I'm sure that probably made some of you nervous. You can see nothing changes here on my end. And then that's the consequent encroachment of the wicks, is what I send inside of the Telegram channel. And you can match this up with the minutes. You can follow the minutes here in the right hand corner and see when I posted what I posted. Everything before the fact, and you'll see the effects of it. Questions all the time. What am I showing up here when I do this tap here where it says market open? I want you to focus on the minutes changing, proving that it's not market replay, because you can't do that with market replay. You would be surprised how many people leave comments saying my examples are in market replay, and there's my limit order being filled. Okay, so getting short near the high of the run and exiting in the low, and then ultimately it does start trading higher. It takes out the high and goes to the Monday high, as I mentioned in the Telegram channel. All right, so that's that. And I want you to think about what I showed today, what I've been showing for the entirety of this year. I'm going to do far less real-time commentary, and I want to focus on the few lessons that I had that I wanted to teach this year. I want to use my energy and time to get through them, because I promised I'd have a couple of them, and I've not been able to do so. My back's been hurting me a lot, so it's very hard for me to find time when I'm feeling well to sit in front of the computer. Like right now, I'm standing in front of it, but I'm leaning over in a way that you would see I'm in physical pain if you were just looking at me. And I'm very uncomfortable. So I'm trying to do what I can. And once I complete them, I don't know how much more I'm going to put out for the rest of the year. So hopefully this is going to be, enough to get you going and show you that this stuff does in fact work and it's worth your time and investing in learning it, but don't expect it to be very quick for you. It never ever happens like that. It didn't happen for me, and it won't happen for you. So if you keep your expectations low in that regard, you won't be disappointed. It'll be something you've expected going in. So again, hopefully this was insightful. Hopefully it was helpful. Until talk to you next time. Lord willing, be safe.